Just help me break down these numbers to the best of your understanding.
Being a World Cup season, I will start from there because...
No, please don't start from England.
No, because I found myself in a similar situation last night. Before the England-Tunisia game, I had called the match for 2-1 in favor of England. But when I saw the stats, you know, the robustness with which England were playing, I revised the prediction to 3-1. Later on in the match, I had to revise it back to 1-2, which was actually the final outcome. What am I trying to say here is that since 2013, I think our economy handlers have learned how to under-predict so that they expect, you know, a good surprise.
Yes.
You remember in 2013, the economy, you know, obtained its worst growth of 4.6%, and that was a shock to everybody. Now, from then on, you know, economists have been very careful what they predict. Like, we are talking in the context of when government, IMF, and I think the World Bank have predicted that this year will grow at a faster, you know, rate of 7.2%, up from 6.1 last year. And we actually expect the economy to grow faster in next year at 7.8. But when you look at Q1, it will give you a very different perspective. It's telling you that forget the predictions. The year, you see, I look at Q1 as a trend setter, a pace setter. So if we're running at 10.6%, that will tell you two things. That give or take, the economy won't grow at 7.2 as these you know, economy handlers are predicting. It will be faster than that. Because take 10.6 across the 4 quarters, that will give you something like a double-digit growth. But if you remove, let's say, the 3.4, which is what it surpassed, the current prediction of 7.2, that will mean it will still give you, let's say Q1 grows at 10.6, Q2 grows at, let's say, 7.2, throughout, 7.2, 7.2 for the rest of the year. That will give you an 8-point-something growth. So I can confidently predict that the economy will grow much better than 7.2, which is being predicted.
You said you can predict, so could you give me a number there?
Well, it will be above 7.2.
All right. Now, yes.
Either 7.8 or 8 or 9.
Okay.
If we keep it at the pace that we've started off in Q1.
Remember, I'll hold you accountable to that number.
Oh, yeah.
But let's just jump into, now we did see, yes, the 10.6% growth here, but then we saw a lot happening again on the back of services that grew by, the service sector growing at least by 12%. Now, we didn't see very many events happening in January or Feb or March. We did see a lot actually happening after the commemoration. That's where we had the Transform Africa Summit. That's where we had Africa Innovation Summit. We did see now Rwanda also moving on to support, to sponsor Arsenal, which is expected to boost the tourism revenues. So moving forward, what do you see happening in the service sector? At least, should we expect more double-digit growth on the same as well?
Traditionally, I've always held that we need a more detailed reporting from probably the institutions in charge of these numbers.
All right, the statistics office.
Because traditionally they will tell you services grew by this, agriculture by that, and industry.
I think when you look at the whole document,
oh yes,
they kind of break down a few
but
things.
There is a number you'll never see, which is the most important. For me, you know, jobless growth is not growth. And when you look at our focus in all these projections, we say we're aiming for faster growth so that we create more jobs. All these numbers, they won't tell you how many jobs we created in the first quarter. For me, that has always been traditionally my problem. I've raised it at previous conferences, and we need to start looking at the numbers vis-a-vis the tangible outcomes that, like the numbers gentleman said, somebody that a layman can actually look at and say, oh, we're doing great things, you know. So, for example, how many jobs were we able to create in the first quarter? If we can't answer that, then it means we can do more in the reporting. And I know NISIL is doing some work towards that direction. To be able, I mean, you see these more developed economies where they will tell you per quarter the jobs that we lost or made. For me, those are the tangible statistics that give you a clear picture of whether we're going towards the right direction or not. For example, how are we tracking our efforts in getting 200,000 jobs per year? Tourism, a big puller, you know, and mover of the economy. You don't see it mentioned in these numbers. But yes, you see that transport grew by 28%. What does it say? It means actually more people are visiting, more people are traveling. It actually puts Rwanda Air in the mix of things. But can we link this to now tangible, you know, indices that actually somebody can actually look at and say, oh yes, things are moving where we want them to?
Kenneth, that's very interesting. Now, last year, close to October, somewhere between the 27th, we did see the government coming out in their savings week saying that they are committed to raising the savings rate from the current 10.2% to 20% of the gross domestic product by 2020. How far are we with this conversation? I
don't know. and we should know, you know, and that's why I keep telling you that whichever moment, opportunity we get to see the numbers and how they are moving, you know, generally as an economy. You see, GDP is combining everybody in one basket. But we really need to focus on the per capitas and, like your question, how much are you saving as a person? For me, the macroeconomics, that's where we need to really focus and start asking questions on an individual basis. The economy expanded. Did you expand? How are affairs in your pockets? You know, savings, what are the dynamics around individual saving? You know, inflation, it's a good thing that they say, because when the food production is doing well, it's likely to ease inflationary movements, which is a good thing if you're going to talk about saving. Because saving, the African mentality towards saving is that you always spend and hope that you'll save the balance. But normally, you want to plan for saving as well. Now, what happens is that inflation is at the mix of everything here. If the inflation is okay, it means that people will find themselves in a situation where they can actually now start planning or budgeting for saving. And for me, let's watch inflationary movements. Let's watch where they come from. If we sustain the food production and everything as we're talking about it, we keep growing the export base, which I saw that grow by 46%. But then there,
mostly supported by export of crops.
Yes. Now the prayer there is that we need to pray that actually commodity prices are on their way up, because the problem is that they're always fluctuating. So this season you could produce much, the prices go down, you're talking nothing. You know, same as food crops. You harvest a lot, you have no post-harvest project, you're talking nothing. So everything, we need to stay up. We need to keep pulling up. And it's a good thing that if we can maintain the momentum in Q1, double-digit growth. That's the conversation we've been aiming for 2020. Keep it that way. You get a 10.6 or 10 point something in Q4, and the whole year 2018, I mean, we could surpass the 7.2 projection we talked about.
All right. Thanks a lot.